I am as troubled about my country's prospects as I have been at any time in my adult lifetime. Widening of what political scientists call the Overton window, kinds of threats made by government against citizens, against institutions that would have been almost unimaginable to me.
How should investors be positioning themselves in this moment of uncertainty?
Almost no one can time markets. The right broad investment approach is to a set of long run goals.
AI is coming for the cognitive class. How do you think about that in terms of deflationary pressure that it will create? How do you think about that in terms of its net impact on interest rates? How does that all come together for you?
AI is likely to raise interest rates. I say that because its implementation is going to be very, very capital intensive. The dollar is fortunate in its alternatives. Europe is a museum. Japan is a nursing home. China is a prison. Bitcoin is an experiment.
Ladies and gentlemen, welcome to Prime Talks. So today we are joined by one of the most influential economic thinkers of our time, Lawrence H. Summers. Dr. Summers has worn many hats, U.S. Treasury Secretary, Director of the National Economic Council, and of course, President of Harvard University, while shaping policies across decades of economic change. And beyond government and academia, he's a leading voice on global finance, technology, and the future of capitalism. And we're truly honored to have him join Prime Talks for what promises to be a very stimulating conversation. Larry, thank you very much for joining us.
Glad to be with you.
So maybe let's kick this off at the beginning. Just before you were Larry Summers, the public intellectual, you were a teenager at MIT. When you think back to those years, like what were some of the early conversations or experiences that most shaped your worldview?
I came from a family of professors. Both my parents were economists, and so I grew up believing in the power of sort of analytical reasoning to help understand complicated human problems. And so I was always very oriented to thinking in terms of probabilities, to trying to make decisions on the basis of data, all of that kind of thing. So from a very young age, I guess I had some kind of affinity for economics. I thought when I went to MIT that I was likely to decide to study mathematics or physics, but as I suspect happens to many freshmen who come to MIT and see the other freshmen at MIT, I decided that maybe was not such a great idea for me. And so there was an element of push. But I think that primarily I was drawn to economics because I really wanted to do analytical things and I wanted to be involved in the world's conversation
Hmm.
about pressing problems. I remember that it occurred to me at some point that if an economist makes a tiny contribution that enables the unemployment rate to be 0.1% lower for 1 month. That's 170,000 people who are working and providing for their families rather than being on the sidelines.
Hmm.
And in terms of impact, that's pretty large relative to most other things that you can do. So I think that also inclined me to want to bring my analytical approach to things to human problems, and economics seemed an ideal way to do that.
And maybe just to go a little deeper on that, you said that you have this analytical approach, you follow the data in an era where there's increasing amounts of noise and proliferation of all kinds of information. Like, what frameworks do you use to help you separate the signal from the noise?
I try to use logic. I try to use mathematics. I try to use probabilistic reasoning. I try to use basic analytical frameworks, whether it's supply and demand or the prisoner's uh, dilemma or self-fulfilling prophecy, and to understand complex phenomena in terms of the recurrent patterns that lie beneath them, and
Hmm.
try to understand them in that way, and then try to explain them. Sometimes it's possible to forecast them, sometimes it's not, and hopefully to be able to influence them for the better by thinking very carefully about them.
And as you've shifted from politics, policy, academia, sort of the practical real world, has your economic philosophy shifted or evolved in any meaningful way?
I think my values, that there's a pretty strong presumption in favor of giving people what they want, that one should use people's preferences, their own preferences, as a guide to what's best for them. That's been pretty constant. The belief that markets are in general a very good way of doing that has been pretty constant. I think that I've seen, on the one hand, more and more examples of how the outcomes that come from markets may not be ideal, they may not be fair, they may be inefficient in various ways. Think of climate change. And so I think I'm more aware of the failures of markets with the passage of time. But I think I'm also aware with the passage of time of the difficulty of technocrats with plans interfering and intervening in markets to make them better. And so I suppose that I used to think in terms of the first and second best with respect to hard problems. And now I'm a little more inclined to think in terms of the fourth and fifth best as the choices that policymakers often have.
Did a book like Freakonomics change your view on how you think about your work, or were you already sort of thinking about economies that way?
I think I'm somebody who's always thought about economics as applicable to a very wide range of phenomena. And I think I'm somebody who has always thought in terms of natural experiments, thought in terms of looking for situations where it's done differently in this state than that state, or the program was phased in at this moment rather than that moment, as a way of learning things. So I admired the work of Freakonomics, but I was probably more influenced by reading biographies of Keynes, or reading books about the use of probabilistic reasoning in decision analysis, or reading about the history of finance.
And so, as somebody who's been an American thought leader on what democracy is for so long, given recent events like the assassination of Charlie Kirk, how do you think democracy survives this increasing divergence between the right and left and the resulting extremism on both sides?
I am as troubled about my country's prospect as I have been at any time in my adult lifetime, at
Hmm.
any time in the last 50 years. And I am caught between two impulses. A part of me sees the polarization that has taken place, sees the widening of what political scientists call the Overton window, the set of ideas that are acceptable, to include kinds of threats made by government against citizens, against institutions, whether it be law firms or universities or particular companies that would have been almost unimaginable to me even a few years ago. And I see that. I see the ways in which we have pursued approaches that seem to have brought all our adversaries together. Think about the meeting a couple of weeks ago in China rather, that brought together the leaders of Russia and North Korea, senior folk from Iran, where the main thing they had in common was antipathy to us. I see all of that and I worry and I'm nervous. I also, though, read American history, and on my reading of American history, it is a story of self-denying prophecy that Americans become alarmed. They issue jeremiads about how the future is bleak, and that sets in motion correctives. That's how it was. Jimmy Carter declared that we had a crisis of the national spirit, and then we didn't. There was great alarm after the decade of assassinations and Watergate, and yet our institutions held. The intelligentsia, the intellectual class, thought that American freedom was in peril during the McCarthy period. John Kennedy believed that Russia was likely to surpass the American economy by 1980. Almost everyone told FDR that he had to assert dictatorial powers if he was to have a chance of combating the Depression. Patrick Henry said that the spirit of the American Revolution was lost in 1792 already. And yet, all of those examples were examples where the prophecies were not feckless or fictitious, but they were in fact an important part of a process of recovery and return. So I don't think we can be sure, and history teaches us that every successful enterprise ends at some point. But I think it's also important to remember that America has been a source of much alarm to Americans before, and it has found its way back. And I dare to hope that that will happen again.
So for our younger listeners, two great points of advice from Dr. Summers. One is read your history, and the second is, don't bet against the resiliency of American democracy. Now, when we think about AI today and automation transforming productivity and labor markets, that's a very different kind of threat to the economy. It's one that we perhaps don't have a historical context for. I mean, we've had the technological revolution, but this is of a different order of magnitude. So how do you think about balancing innovation and social cohesion? Like, is capitalism at risk of outpacing democracy?
Sylvia, I would dare to disagree with you in your calling AI a threat without also calling it a major opportunity. And if I look, more than half the jobs that people in the United States do did not exist when I was born in 1954. And so I think it's a grave mistake not to think that tools that help people shape their worlds more effectively, understand their worlds more effectively, communicate more effectively, don't make a great contribution to human welfare. There were people who were very fearful when the printing press came along that it would no longer be possible for people would not nearly as much memorize texts, and that something fundamental would be lost when they didn't memorize texts. There were great fears 30 or 40 years ago when the spreadsheet came along, that because of the spreadsheet, there'd no longer be jobs for accountants. And in fact, while it made it much easier to do an analysis, when analyses were 3 times as easy to do, people demanded 5 times as many of them. And in fact, the demand for accountants went up after the spreadsheet. The demand for bank tellers went up for several decades after the discovery of and implementation of the ATM. So I think it's very difficult to predict what these impacts will be. But I, for one, think that if the people involved in developing and disseminating them are responsible, if government does its job and with the right timing provides frameworks that both enable and regulate, I think this has immense potential to make the world better.
Are you personally using AI every day?
Yeah, I use it to ask all kinds of questions, and I think I am smarter and better informed because of its existence. And if I was younger and it was more native to me and I was more skilled in its use, I suspect it would make an even greater contribution to my productivity and my effectiveness.
And Larry, I want to go back to something you said. I want to stay with AI for and go deeper into that. But you said earlier that there was effectively a lot of sensationalism around the prospective downfall of the U.S. and that is, I just wonder how you're thinking about that in a world in which, again, algorithms are sort of driving us further and further into our echo chambers and bifurcating, again, the right further right, the left further left. That's a new dynamic that we've never had, where just the world and reality in which we live in seems to morphs and adapts and really following some of our basest instincts. Any thoughts on that?
I mean, I hope that over time, whether it's sports, whether it's the right kind of political leadership, whether it is the right kind of cultural leadership and art, that we will have more common experiences as Americans and find more areas in which we can make common cause with one another and see each other's humanity. I think it's a mistake, though, with all the problems that we have, to see the glass as being so empty.
Hmm.
Gay Americans are and accepted and welcomed into our society in a way that would have been inconceivable
Mhm.
25 years ago. We
Mhm.
have a huge distance to travel on civil rights, but it's a long way from the America that I grew up in. And so I think it's a mistake to conflate the fact that, yes, there is a more clear sorting between the political parties than used to be the case of people with different ideologies. And yes, just as we now have radio stations, we've for a long time had radio stations that could bring us each our favorite type of music. We now have more ability to get our favorite type of news, and sometimes that's news that reinforces our prejudices. And
Mhm.
I wish we could find more ways to come in over the top with respect to that. But I do think it is easy, and there's a very long tradition of each generation thinking that there are huge things being lost that used to be there.
Mhm.
And I think that it is important also to recognize very important elements of progress.
Hmm. Yeah. And maybe coming back to AI, and by the way, I agree with you, and I hope you're right. I really hope you're right. Um, Coming back to AI, I know that you've joined the OpenAI board, and you had said that if I'm not mistaken, that AI is coming for the cognitive class, and there's for sure some displacement, which you of that's going to happen in the commercial realm. How do you think about that in terms of deflationary pressure that it will create? How do you think about that in terms of its net impact on interest rates? How does that all come together for you?
My guess is that cumulative impact of AI is likely to be to raise interest rates. I say that because its implementation is going to be very, very capital intensive for the chips, for the data centers, for the energy that's going to be necessary to power uh, the data centers. And that's going to substantially increase the demand for funds at a time when budget deficits are big.
Hmm.
I also say that because if, as I suspect, it raises the rate of growth, that's going to increase the demand for new housing as people are becoming more prosperous. That's in general going to increase the demand for borrowing as people see that they'll have more and more income in the future and want to smooth their spending over time. That's going to make people feel a bit less need to save because they're going to know that the future is going to be relatively bright. So my guess is that if this technology proves to be a major force shaping the economy, it will probably contribute to higher real interest rates. There may be some deflationary pressure. That will depend upon how workers respond and the extent to which the greater productivity is translated into higher wages. But my best guess would be that the impact will be towards higher interest rates.
And there's an argument to make. I mean, it's been made that obviously the rate of change in our technology is exceeding the rate of change in our biology, which means that that displacement may not be as smooth as we would like in terms of employee. And there's an argument that UBI is on some level inevitable. I would love to hear just like your thoughts on what's the probability you'd assign to us actually witnessing UBI in the decades ahead and why not?
Let me first just say that whether it was covering distances fast with the steam engine, whether it was moving large amounts of heavy material powered by coal, whether it was getting from point A to point B far faster than horses pulling people ever could, whether it was taking to the air to get between continents in within an 8 hour day, it is not a new thing for technology to make a kind of progress that is very, very large relative to the range of variation in human capability. And that has not been confined to the physical realm.
Hmm.
Think about what a spreadsheet does. Think about the calculations that a computer is able to do. Think about the ways in which you could speak with a customer service agent who was electronic even before ChatGPT had come to the marketplace. So I don't want at all to minimize the importance of the AI revolution, but I think we need to be careful about the assumption that everything about it is a complete discontinuity in the way in which the world works. With respect to UBI, I would give odds of less than a third
Hmm.
that 10 to 15 years from now, we will have a large scale UBI program in the United States. Why
Yeah.
do I say that? First, I think it's important to recognize that even the most wondrous technologies often are adapted less rapidly than their proponents expect.
Hmm.
I remember I was in the first automated vehicles going from San Jose to San Francisco um, in 2014, discussing what truck drivers would be doing in 2020. And that is not an isolated example. And I just encourage all your listeners to remember the aphorism, things take longer to happen than you think they will, and then they happen faster than you thought they could. So I think that's the first thing to say. I think the second thing to say is that a UBI program is immensely expensive and not that well targeted. My children have, from time to time, taken a semester, or more commonly, a summer off. When they did that, they would be eligible for some kind of UBI.
Hmm.
I don't know why all the other taxpayers should be contributing to help support my children when they decide not to work one summer before, during, or after uh, college. I'm not sure why it isn't a better way to provide for our retirements for us to count on Social Security and then count on our own savings
Mhm.
rather than some separate universal basic income. I'm not sure why those of us who have been fortunate should be receiving a large income from the government just for existing. So I think when you look hard at the arithmetic, it is very expensive and it is very poorly targeted
Mhm.
relative to types of programs that one can imagine. I think the third thing to say is that it raises very profound questions about vocation. And I I don't need to work. I anticipate doing work of some kind, perhaps not, certainly not with the intensity that I once did for as long as I live. And am able uh, to work. I think many people find great meaning in working and being part of some enterprise to which they are contributing. And so I think a model of humanity in which there's some central mechanism that produces great wealth and everyone else is given substantial purchasing power, but no purpose.
Mhm.
I don't know that my experience looking at people who have been fortunate or unfortunate enough to have inherited large sums of money, um, or those who've been very successful but have found themselves out of work at an abnormally young age. I don't know that my observation would suggest that purchasing power without purpose is something to be set as a model for society. And so I think between the delays with respect to the disruption and the fact that the more cognitive classes that are more likely to be disrupted probably have more flexibility. The questions of expense and targeting and the issue of purchasing power without purpose, I would bet against
Hmm.
UBI as a major feature of the American landscape in the next 10 to 15 years. I say that with some trepidation and caution, and with the worry that I might have made some other set of arguments and bet against the Social Security system as well in that time period. And so I may well turn out to be wrong,
Hmm.
but I think the odds are probably 2 to 1 or better
Hmm.
against a UBI in the next 10 to 15 years.
And even if your prediction doesn't end up being accurate, I think that Mo and myself can really relate to this. What it's not necessarily healthy to have purchasing power without purpose. And that's something that we work with extensively in our families, because in a family office, you can end up with an entire generation that has purchasing power without purpose. And I think one of the things that we've really come to witness is that that work is a very important part of a satisfactory human life, that we are actually here to work to some degree. There's something deeper than just the making money part about our work.
And does
I like
purpose
to
show
use
up
the
in the economic models that you deal with? Like, this is obviously part and parcel of our work, but I'm curious, as an economist, as a mathematician, like, how do you view purpose as part of that philosophical framework?
I think it, so I like to use the word vocation.
Hmm.
Because vocation carries the implication of work, but it also carries implications about both inner satisfaction and service. Um, I don't know that this is something that economists have a good handle on how to how to think about. Um, but I think it's going to be an increasingly um, important question in the society. One of perhaps the most disturbing long-term social trend in the United States is this. In 1960, when the population was less educated, when work was much more physical, only about 4% of men between the ages of 25 and 54 were not working at a typical moment. Today, work is less physical. People are better educated. People are in better health. And that number is closer to 14% than to 4%.
Hmm.
And if one looks at men in that age range, and I choose that age range and I choose men not out of any sexism or ageism, but because I think it's fair to say that is the group where there's the deepest and longest sense of work as being a part of normal life. Um, for everyone who is doing a wonderful job at home with the kids while their partner is in a job, for everyone who is engaged in the vocation of doing a great amount of volunteering in the hospital or coaching Little League baseball. The available evidence suggests that there is more sprawled on the couch in the parent's home, drinking beer, playing a video game, and watching the television.
Hmm.
And so I think we have already seen in the groups where there have been the biggest withdrawals from work behaviors that suggests that the things that go with withdrawal from work are not altogether happy.
Mhm.
Uh,
No,
yeah.
I feel like that fits my own observation as well. It's super interesting. Now, to just to pivot back to the economy, I know that you told us before we started recording today that any kind of economic advice you give is very time sensitive. So we're speaking on September the 15th. This might only be uh, cogent and accurate for the next 1 to 2 weeks, but given your early warnings about inflation and recent cautions on stagflation, how should investors be positioning themselves in this moment of uncertainty? Which really, in reality, every moment is a moment of uncertainty. But where do you see positioning with interest rates?
Every moment is a moment of uncertainty, and almost no one can time markets. So, in general, I don't listen to I have views about when the market seems high or the market seems low, or bond yields seem likely to rise or bond yields seem likely to fall. But I don't move large amounts of my money on the basis of my views. And I don't think others should move large amounts of money on the basis of my views. And it's not because I think their views are better than my views. I think it is, by the logic of the situation, very, very difficult to time markets. And so the right broad investment approach is to settle on um a set of long run goals, settle on a judgment about one's tolerance for risk, set some targets in terms of asset allocation, be prepared to a limited extent to be opportunistic if one sees individual things that seem especially attractive, but not to try to guess when the market's going up or when yields are going up or down and bet heavily on that, because the experience is really very discouraging on the vast majority of us's ability to do that kind of thing. I am surprised, uh, given that the president is savagely attacking the independence of the Fed, given that the process of globalization, which has benefited the United States enormously, is breaking down, given the presence of tariffs and very large U.S. budget deficits that are expected even to grow with the passage of time. I am surprised that longer term interest rates are not higher than they are. And I'm surprised that market judgments about the volatility of interest rates, given all of these uncertainties, are not greater uh, than they are. But I think it's just, Keynes famously said, markets can stay wrong longer than most investors can remain liquid.
Yeah.
And so I think that caution is the right order of the day with respect to market timing.
Well, I mean, I think what I heard you say for our families that are active investors, not just caution, but to not ever have the hubris that we can time markets correctly. So it sounds like if I read you correctly right now, you're not adjusting your portfolio based on duration of interest rates or what you think is going to happen in the economy in the next 6 to 12 months. You're setting a very long-term investment plan, maybe at a horizon of 5 to 10 years, and you're allocating accordingly.
Essentially that is what I would say. And so I'm sort of aware that I might be acting differently, a little bit differently, if I was really struck by how high bond yields were and it seemed odd that they would be so high, then I might have a longer duration portfolio. Or if I was struck by how many stocks seemed so desperately cheap, I might be tilted somewhat more towards equity or use leverage somewhat more. But those adjustments would be at the uh, at the margin. And I think the particularly common mistake of people who follow their instincts is to get out and to stay out. And people who do that probably do miss some downticks, but they also miss some substantial amount of upwards movement. I don't remember the fact exactly, Mo and Sylvia, but of all the gains the market has had in the last 75 years, a very high fraction of them are in the best 75 months.
Mhm.
And so if you operate that way, by getting out when you're nervous, there is the risk that you'll have succeeded in missing something bad, but that the market will get to a new high without you.
Yeah.
And that's why I tend to recommend caution in kicking around a portfolio.
So do you think we're underestimating the structural consequences of things like rising debt, demographic contraction, geopolitical fragmentation? Are markets underestimating those risks right now, or do you stay fully invested and allocated in a time like this?
It's not my place to give people detailed investment advice. I already said I was a bit surprised that long-term yields were not higher than they are, and that's a kind of answer to your question. But they could get lower before they got higher. There are just a lot of things that can happen, and so I would want to put more emphasis on caution in any kind of radical market timing than I would any particular view I have about the level of markets.
Yeah.
I'm very mindful of the fact that Alan Greenspan was an extraordinarily shrewd observer of the economy and of markets. And he made a remarkable and prescient call that did a great deal for the American economy in 1995 when he resisted pressures to raise rates because he saw the productivity growth that was coming from information technology, and he sensed that that was there. Nonetheless, in 19 nonetheless, in when was it? In the fall of 1996, when the Dow was at 6,300, he expressed the view that there was irrational exuberance
Hmm,
in the market, and that was 4 years too early.
hmm.
And the market doubled after he said that. And that's why I just come back to the importance of caution in judging these things.
Yeah. And I mean, I think for all of our listeners, like you did mention that we're in an unprecedented time when the independence of the Fed itself could actually be questioned. And so how that impacts interest rates is yet to be seen.
I think that's right. But I am surprised that given that it seems to me it's pretty severely questioned, and there's at least some prospect that it will be compromised, I'm surprised that more of that is not reflected in higher long-term bond yields.
And do you have any, just vis-a-vis, given the challenges that we're seeing? Now, these challenges are not just in the US. I mean, Europe is challenged, China has its own issues, which maybe we'll come back to. But do you have any unique or contrarian views vis-a-vis the US dollar, which is sort of from where most economic voices sit is sort of on a trajectory downward. But again, would be interested to hear your thought, given the resilience you believe there will be for the U.S. going forward.
I think that it is better to live in a country that capital wants to get into than a country that capital wants to get out of. And the United States is a country that, for all our problems, capital is eager to get into. I also think that, to make a wisecrack, uh, the dollar is fortunate in its alternatives. Europe is a museum. Japan is a nursing home. China is a prison. And Bitcoin is an experiment. So if you want to get out of dollars, get into something. Comparison aspect um, is something that I think is worth remembering when one thinks about the dollar. You know, Joe Biden used to say that elections were not about the almighty, they were about the alternative. And something similar is worth remembering when the conversation is about the level of the dollar. That said, I think if I had to guess from here, I would guess that the dollar would tend to decline. Now, some of that is priced in. Interest rates are higher in the United States than they are in Europe or Japan, and that means that the forward dollar is trading at a discount to the current uh, dollar. So the market is betting on declines in the dollar. I think if you held a gun at my head, I might well decide to be short the dollar, even relative to that forward rate, um, simply because I think that there are a variety of pressures that point in that direction. But I am I don't think it is at all obvious. If it were obvious, it would have already
Mhm.
happened to some extent. And I think you do have to realize that if people want to get out of the dollar, they have to get into something. I think, by the way, what I said about the dollar being fortunate in its alternatives and what you said about a lot of questions hanging over the dollar is probably the key to understanding why the price of gold has done as well as it has. And if one adjusts for the fact that normally gold does poorly in periods when real interest rates rise, and real interest rates have risen, and gold has done extraordinarily well, inflow into gold is even stronger than that.
Yeah, yeah. And just picking up on, I loved your comment, well, all of the analogies, but China specific as a sort of as a prison, um, putting aside the conviction in its currency, obviously China's has witnessed a whole bunch of demographic and real estate headwinds recently. How, if at all, do you see that reshaping financial leadership over the next decade? Does that limit the prospects of this competitive tensions that we've seen, or the prospects of China overtaking the U.S. at some point or another? I'm just curious how you view that and its impact on global markets.
A few years ago, it was regarded as a certainty that in exchange rate GDP, China would surpass the United States. I am now less sure that that will happen, given the demographic developments, given the level of capital flight and incipient capital flight from China. The people who made the best projections of how it was going to fall apart for the Soviet Union were the demographers. And um, you've got to worry about any society where the number of children born today is only slightly greater than half of what it was in 2016 or 2017. I mean, the truth is that the one child policy was eliminated some time ago, and people still only want to have one child. And, that much aging isn't something we've seen before historically. And it has to raise a lot of questions about what the future holds for China. On the other hand, and this is why it's so difficult and complex, um, China has achieved a set of technological capacities, not just in a few sectors, but in some significant number of sectors that are quite remarkable. And it really can claim to be the workshop of the world,
Hmm.
given its capacity for manufacturing production. Now, how much of that capacity and how much of that output the rest of the world's going to be willing to absorb, I think is very much in doubt.
Hmm.
But I do think it is quite problematic.
Are there any other macro views like the inevitability of China surpassing the US that you believe are sort of misconceptions? What are some of the most common misconceptions that you sort of come up against when you're talking about kind of the macro environment?
I hesitate to call views misconceptions because none of us can really know what the future holds. I do think that I do suspect that the Chinese optimism of several years ago will come to be seen like the Rush optimism about Russia's prospects in 1960 or Japan's prospects in 1990. I've sometimes put it that when the American privileged decide that it's time for their children to learn a certain language, that's the moment when one should become skeptical of the prospects of the country that speaks uh, that language. Um, I think that it is, I think the only thing I would advise people is that one of the surprising features of economic life is that if one looks at the correlation between countries' growth rates in one decade and countries' growth rates in the next, it is very, very low.
Hmm.
And so there is a tendency to engage in extrapolative forecasting, where those who have grown fast are assumed to be likely to continue to grow fast, and those who've grown slow are likely to continue to grow slow. And I think the broad statistical evidence would suggest that there's a bit less foundation for that belief than it is ensconced in people's forecasting uh, models.
Hmm.
Um, so I don't know of another widely held view about which I'm deeply deeply skeptical. I wouldn't be surprised, given the demography facts, of some of the we're headed into an Asian century stuff will play out less dramatically than some have thought, because it's hard to have it be an Asian century when the population of Asia is shrinking.
Mhm.
And
Mhm.
I think in most parts of Asia, it's not going to be very easy to make the social compromises that are necessary to accept large numbers of immigrants.
Interesting. So with inequality rising, what should wealthy families consider about their role in the future social contract? So where do you think a wealthy family has a moral obligation back to the society in which it's a part of?
So I think it, this is obviously a very personal thing, and it's a very personal thing for each person to decide. And frankly, the right answers will vary from person to person. I don't think people who have built businesses that have employed large numbers of people and have brought satisfaction to even larger numbers of customers should think that the activities that made them wealthy don't count in the moral equation.
Mhm.
They've made an enormous contribution to the society just by doing their businesses. I think those who have invested successfully, what after all does it mean to invest successfully? It means to have found uses of capital that were much better than average uses of capital. And so to have had capital and to have deployed it well is to have made a contribution. So
Mhm.
I would hope that people who, for one reason or another, have been very fortunate would not, in most cases, suppose that the moral calculus was now about what they were going to do rather than about what they and their forebears and their families have done. At the same time, the one certain proposition is that you can't take it with you. And so fundamentally, for people with substantial wealth, there are three uses. They can spend it, they can give it to their uh, children, four uses. They can spend it, they can give it to their children, they can pay it in taxes, or they can deploy it towards a cause or causes that are important to them. I'm, I think that how you do that is a very personal choice that people make. As I look at the really big fortunes that have become foundations, I am struck that in most cases, decades afterwards, the money is being spent in ways that would have been of no significance to the person who contributed the money. um, Whether I approve or disapprove of the values of the people who made great, uh, great fortunes. What the Ford Foundation does today is unrelated to anything Henry Ford. And I could go through more examples like that. So I think that people should think about deploying their resources while they're alive to try to help things they think need help and to try to do things that they think need to be need to be done. And that'll what those are will differ from person to person, and that's part of the great strength of a country like ours, that there are a lot of different views, and so a lot of places where people with ideas can present them and try to get supported. But I'd encourage people to think about deploying their wealth while they're alive and able to deploy it rather than having it deployed by a misty future that they can't quite see. And I would also encourage people to be realistic in their aspiration. I have found that many people who would understand immediately that if they went to an investment advisor and said, I'd like you to find me an investment that will go up by a factor of six in 3 years, were making an unreasonable request that couldn't confidently be met. When they approach philanthropy, say something like, I'd like to invest in a neglected area of cancer research that has a one-third chance of solving a substantial portion of cancer that will be enabled with my $10 million to save 50,000 lives. Well, if it was as easy as all that, the $10 million might have already flowed. And so I think one needs to recognize that one can make a real difference through philanthropy, but one needs to have realistic aspiration for what one can accomplish. Many people have a tendency to set goals that are so ambitious that they don't find any way of deploying their resources and end up not deploying their resources and not doing any of the good that can be done.
Fascinating. I mean, in many ways, you embody this kind of this message. The reason we're doing this as a virtual conversation is because we have tried over several years to try to get you to keynote some of the conferences we have hosted, and the response almost every year has been, Larry will never miss the classes that he teaches at Harvard. Like it was, a non-negotiable, non-starter. And I was always, really curious about why that has become such an important aspect of your life, and the difference and the impact that you are seeing through that. And I don't, maybe it's wrong to call that philanthropy, but I think, listen, you don't need to be teaching, you don't need to be doing anything. So what is it about that is most meaningful and substantial to you?
And is that your philanthropic passion?
It was a beautiful weekend on Cape Cod, the Labor Day weekend. And I had to come back because classes began on the Tuesday after Labor Day. And I did ask myself why exactly I was doing this um, in the context of how nice it was on Cape Cod. I do it because I find I learn a lot by teaching. I do it because I find that it forces me to stay up to date and to figure out what I think about a range of evolving issues. I do it because I feel like, not for very many people, but for a certain number of students, I can expose them to something that changes their approach to life and enables them to have much more satisfaction and made a great contribution. People did that for me, so it seems like I should pay it uh, pay it forward for pay it forward for them. So I think of teaching as part of my public service. My wife and I also support a number of scientific and religious and educational causes that we try to be very thoughtful um, about both what is meaningful to us, which is what my wife tends to emphasize, and where the results per dollar are likely to be highest, which I tend to put a bit more emphasis on. And frankly, I try in philanthropy to use the same approach that I would use in investment. In investment, you try to look for things that are valuable but obscure and therefore underinvested in and underpriced. And you try to stay away from anything that's red hot and everybody's talking about because it's likely to be overfunded and therefore overpriced. And that same way of thinking, I think, contributes to thinking about where one's likely to be able to make more of a difference philanthropically.
I was going to ask you one piece of advice you could offer ultra high net worth families when it comes to stewarding their capital, but I feel like that might have been the advice.
I give you one final piece of advice that I try to implement. Make reversible errors.
Mhm.
You're going to make mistakes in life. There's certain kinds of mistakes that if you make them, you can correct them tomorrow. And there's certain other kinds of mistakes that if you've made them, they're uncorrectable. And keep that in mind as you think about maintaining relationships, as you think about making financial commitments, as you think about the wide range of choices that we all face in our lives.
It's beautiful. I know we're winding down here, but
Yeah,
maybe just one or two questions to close things out. Um, the My two questions are, I mean, you mentioned mentors that have been impactful on you. Would love to hear about that. There are a myriad of books behind you. If there was any book in particular that was most impactful on you, any of those would be great.
I was very influenced at an early stage in my career by Martin Feldstein, who was a very distinguished economics professor at Harvard, who employed me as a research assistant, who gave me all kinds of advice about becoming an economist. And then at a later stage, when I worked at the Treasury, I was very influenced by Robert Rubin, who
Mm,
was my predecessor as Treasury Secretary and who had a very different set of life experiences than I had. He had been the CEO of Goldman Sachs, and he taught me a lot about leadership, about organizations, about management, about setting direction. And so I think I've been very, very fortunate in the mentors I've had. And of course, of greatest importance were the mentors who were shaped me at a time when I was much more malleable. Uh, my my parents, to whom I really owe everything. I just would urge people uh, to read books about things they don't normally think about. They're much more likely to open open your mind than reading about what you already know about or think about. I've probably been particularly influenced by reading biographies over time and reading stories of people who, with various problems and various challenges, have nonetheless been able to make large dents
mm.
in uh, the universe. But for different people, it will be different choices.
That's fantastic. So just to wrap this up, is there anything that you're working on today? Any big idea? Anything you wish people knew more about? Anything, any way that our listeners could be helpful to anything in your world? Any call to action that you would want to part with?
I would I would hope that people would really work at thinking about what they could fund that would change the world over time, even with a long causal chain. When there's a hurricane and there's an appeal, a lot of people see that and they
Mm,
move forward immediately to it. When it's the kind of scholars I have a chance to work with who might develop a new idea that makes there be better economic policy or better design of our political system or better reform of our healthcare system, where you might touch hundreds of thousands of people for a long, or millions of people for a long time. I sort of suspect that as a society, we underinvest uh, in that. So I would encourage people to look into the development of new thought because I think that's what ultimately is what changes the world. Maybe that's a predictable thing for a college professor to say, but it is my view, and it is where, to the extent I'm able, I invest money.
Larry, it's been such a privilege to have you with us. There are few voices in that I know of that could connect history and markets and a future quite like yours. And really, thank you for sharing your wisdom and insights with our listeners.
Thank you.
It's a pleasure. Thank you so much.